You think banks are just holding your cash? Think again. They're actually creating money out of thin air, shuffling it around like pros and juggling massive risks, all while making sure you don't have a clue as to what's really going on. Let's talk about this. All right, so want to take a quick minute, share some thoughts. We have the FOMC made their final verdict to cut 50 basis points. And so, of course, that came out of thin air, came out of nowhere because everybody was anticipating a quarter at the max, but not a whole half a point. Clearly, there's something brewing behind the scenes. And it's my personal opinion that it has everything to do with the banks. And so the banks are up next to bat. And we're going to find out exactly what they are experiencing as far as the bad loans that they've taken onto their balance sheets and the impact that will have upon the economy. And so literally right now, the banks are going to be front and center, and we're going to hear more about them. And I anticipate in the next couple of weeks and definitely months, seeing more volatility with their stock prices and things like that. And it's going to get real rocky out here. And so I want to take a minute and share some thoughts as to how more in-depth look at how the banking sector works, because beyond our entire lives being dependent upon banks, we've never questioned the banks in the way that we will in the next couple of months and weeks, just because our entire financial future somehow one way or another goes through the banking sector. So if that was not available, then what? And these are some things I think people will really start considering. So I want to share with you 3 to 4 ways that the banks are really have stranglehold even our own government with the practices that they've created, where they can just create reserves and put it out in the open, and nothing they can do about it because they actually have the government for the most part by the balls. But anyway, let's face it, banks run the world, but most people have no clue. So it's not about vaults full of cash or shady backroom deals. It's about creating money, shifting it around, and managing risk in ways that are so complex it's designed to fly right over the heads of the average person. But today I want to share with you some simple things in plain, simple terms as a way of giving some stories that really make sense. First one is banks literally, they create money out of thin air. As hard as that might seem, it's true. So imagine buying a car, you walk to the bank, apply for a loan, they approve it. So far, so good. But here's where it gets wild. When they give you the loan, they aren't handing you money exactly or pulling it from a stash they have saved up. Nope. They've just took a number into their account. Bam. New money is born. It didn't even exist prior to this transaction, but now it does. So it feels like magic, right? But it's not magic. It's the bank's version of money making or currency creation. On the bank's balance sheet, they mark the loan as an asset because you owe them money, and your new car deposit is their liability. And so the problem is when you go to pay the seller of the car, who banks at a different institution, your bank, let's call it Bank A, needs to transfer some cash to the seller's bank, which is say Bank B. And if Bank A is running low on funds, it might need to borrow from Bank B for it all to work out. So think of it like this. Imagine you're at a neighborhood barbecue and you forget to bring cash to set up your tab with a local, lemonade stand. Yeah, so you owe the kid right next to you $5. So you ask a friend to spot you until you get paid on Friday. The kids get the cash. Now you owe your friend instead of the lemonade stand. So banks play the same game but just with bigger figures, swapping IOUs, relying on each other to make sure that the system keeps moving fluidly for the most part. And then one of the second ways is like the idea of shadow banking. It's mysterious, behind the scenes door operations. But if you think step one was a little out there, wait until you hear about the shadow banking system. No, it's not some underground, layer where bankers go for world domination's sake, even though some of them might actually have some nefarious connections. But the shadow banking is a space where banks operate outside the rules of the Federal Reserve and create their own reserves and currency. And so picture this. You're traveling to Europe and you need to exchange dollars for euros. You don't physically need to bring all your cash overseas. So instead, the banks transfer money between accounts in the US and Europe without even moving a single bill. They're just moving numbers between ledgers. Like when you have a friend who Venmo you, say $5, $20 or something like that for lunch. It's not real cash being handed over. It's just numbers on a screen or numbers being transacted amongst the phones. So in this shadow system I'm referring to, banks literally they trade deposits with each other. That's it. They create reserves out of nothing, just like the Fed does, but outside the Fed's jurisdiction. And so because these banks don't have to play by the U.S. rules, they can literally effectively just print as much currency, monopoly currency. This means that they can keep creating and shifting money endlessly unless something hits an economy and there's a big snag, and then that's where things really get problematic. And so the banks could literally buy everything, but there's a catch to that. So if the banks can create money, or currency rather, reserves whenever they want, they don't just have to buy everything. Imagine your friend Venmoed you suddenly, realizing that they could just keep sending themselves currency from other accounts. But why not go on a shopping spree? That's what the banks could do. They could buy all the stocks, real estate, gold, silver, anything of real value. But then there's a catch to that. Here's the deal. See, banks might have the power to create currency, but that doesn't make them invincible. They still have to manage the risk and the stuff that they buy. For example, let's say a bank buys a government bond. At the time, the bond is worth, say, $100. But if the interest rates shoot up, the value of that bond could drop, making even somewhere close to zero. Now, the bank has a worthless bond and a whole lot of IOUs, and suddenly they're in trouble. And so it's like buying a car that seemed like a great deal, but then the engine dies 2 months later. Now you're stuck with a junk car that's worth nothing, but you still owe money on that car. So banks face the same problem. If they make a bad purchase, the other banks in their network won't want to trade with them anymore. So that's when things start to fall apart. Banks survive on trust and trust that their assets hold value and other banks will keep lending to them. So the moment that these trusts runs out, or as liquidity issues, the ability to move currency around dries up, it's a domino effect. And the whole financial system from that point up just seizes up and the dominoes come down. Why should you care? It's a big question. Now, I know that you're thinking, why does any of this matter to me? It matters a lot because your currency's in these banks and these banks are maneuvering without your permission. So let's say you're investing in the stock market, trying to decide whether or not to buy real estate or wondering if, say, gold, the next big move is coming anytime soon. So most people focus on what the Federal Reserve is doing by raising interest rates or lowering interest rates as of today by what's called as expanding the money supply. What's really driving things behind the scene is how much risk the banks are willing to take. So if banks are feeling, confident and trust each other, they'll keep the money flowing. And assets like stocks and bonds, real estate can soar. But if the trust starts to crumble because they made too many bad risks, then liquidity tightens up. They don't no longer trust each other. They no longer lend to each other. And then everything comes crashing down. So the next time you hear about the Fed making moves, remember, it's not just about the Fed, what they do. It's about how the banks are managing risk. And so if they're playing it safe, the whole system can keep chugging along with no problem. But if they overextended themselves, then watch out. And that's when the house of cards are literally coming down. So that's where we're at right now. And so now that the Federal Reserve has decided to cut, there's a probability that the banks may continue to expand the monetary supply. But then again, because of all the losses that they've taken on, they may not be so willing to lend. So therefore, things could remain tight. Therefore, the Federal Reserve is on the hook for having to do some type of potential emergency response down the line. So these are some things that the interconnectedness of the banking sector and how they are able to create, manipulate, and maneuver within the system, and it's legal. That is what is at stake right now, because it's only so much more of the manipulation that they can do before something's exposed or something is brought to the light. And then at that point, confidence, because the currency is only as worth as much as the people who have confidence in it to still use it. And if you no longer trust your bank, or the banks don't trust each other, they're going to run to the Federal Reserve. And the Federal Reserve will then have to step in. And then it's good to say, if they do that, the people will get wind that something's not right. And then that's when panic ensues and more people will look to do things that they normally wouldn't do when it comes to their finances. So just something worth keeping an eye on. We got a couple weeks, couple months before things really start to surface, and you're going to be asking questions. People are going to be giving all types of scenarios and answers. But just remember, at the heart of all this is the banking sector. And the Federal Reserve, Jerome Powell, and FOMC, their job ultimately is to further expand the monetary base and keep this Ponzi scheme going. And then they get their cut off of it because all the globally systemic important banks are shareholders in the Federal Reserve. So just one big Ponzi scheme that the average Joe's just not involved in or privy enough to be on the inside. And so that's why, as a part of the channel, I try to encourage people, don't just pay attention to what they're doing, mimic what other nations are doing. And so we clearly see how Russia, China, and all the other nations, they are deciding to back away from this dollar-focused Ponzi scheme of an economy, and they're getting physical gold. So tangible assets in your possession will be the best way to preserve and protect as we go through these turbulent times in the days ahead. So get your gold, get your silver, get your crypto if that's what you do. So in the description here, you can become a part of the silver team. That's where I literally help people get silver by automating it and then being able to share their information with other people to earn from it and then be able to buy more silver. And so I find it to be a great silver network of individuals that realize the importance of silver, want to help other people, and get rewarded for doing it. That can be you if you want. MySilverTeam.com is a link. And then also, if you guys are interested in some of crypto plays, a lot of things is going to be brewing. When they cut the spigot on officially, a lot of crypto projects are going to do quite well. So if you haven't gotten involved, if you're interested, links in the description for the app that I use to take advantage of some opportunities. So I'm going to be sharing more of my plays and strategies in the days ahead. But anyway, curious to see what you guys think. If you found value, hit that thumbs up, drop a comment down below, and I will see you guys later. Peace.